Okay, let's get into this. It is Tuesday, February 17, 2026. And today, we are looking at a document that, normally would be a cure for insomnia, a corporate earnings press release. But you should stick with us, because this is not about accountants high-fiving over spreadsheets. We're digging into the Q4 and full year 2025 results for Etoro Group. And honestly, this reads less like a financial report and more like a battle plan for the future of how we all handle money.
It really does. Normally when we look at earnings, we're just searching for a penny beat here or a guidance miss there. But this document from eToro it's different. It feels like a blueprint. It basically declares the end of the era where a trading app is just a place to buy and sell some stocks.
Yeah.
They're pivoting and pivoting hard toward what they're calling a financial super app.
Super app. Yeah, that's a buzzword we hear a lot, right? Usually from companies just trying to do too many things at once. But here, it feels like they're actually trying to solve a problem. So the mission for this deep dive is to figure out if that term, has any teeth. How does eToro go from being that social trading site to a publicly traded AI-powered ecosystem? Because these numbers suggest they aren't just surviving this fintech shakeout. They're becoming something else.
Exactly. And to really get that evolution, we have to look past the headlines. We've broken this down into three main pillars from the report. First, we have to talk about the war chest. The sheer financial muscle they've built up is staggering, and it completely changes what they're capable of doing.
Okay, the war chest. What's second?
Second is the technology shift, specifically this new AI they've introduced named Tori, and the move toward a 247 market structure.
And the third pillar, I think I know what this is.
The third one is fascinating. It's a huge divergence in the data from just last month, January 2026. We're seeing crypto behavior and traditional equity behavior moving in completely opposite directions. It tells a very specific story about the psychology of the retail investor right now.
I saw that in the notes. A real tale of two markets. We will definitely get to that. But let's start at the foundation. Their CEO, Yoni Isaiah, he called 2025 a milestone year. Obviously, going public is a huge part of that, but what do the actual operations look like? Because a public listing is great, but that doesn't mean the business is working.
Oh, the business is definitely working. I mean,
Right.
if you look at the bottom line, it's a record year.
Yeah.
But I want to focus on a metric they use called net contribution. For the full year, 2025, it hit $868 million. That's up 10% year over year.
Hold on, let's define that for everyone. Net contribution. That isn't a standard GAAP accounting term you see everywhere. What are they actually measuring with that?
That's a great catch. In eToro's case, net contribution is basically their total commissions and trading income, minus the direct costs of trading, and this is key direct marketing expenses. It's a proxy for the efficiency of their core engine. It tells you that after paying to acquire customers and execute their trades, the machine generated nearly $900 million.
Okay, so that's the engine room. What about actual profit? Because for so long, fintechs were famous for that growth at all costs model, just burning cash. Are they making money?
They are. Their net income on a GAAP basis, so, the standard by-the-book profit measure rose to $216 million, up 12% from 2024.
$216 million in real profit. That puts them in a totally different league from the startups of the early 2020s.
It does. And that profitability is driving asset accumulation. Their assets under administration, or AUA, basically the total value of everything users hold on the platform, cash, stocks, crypto. That grew to $18.5 billion, an 11% jump.
$18.5 billion is a healthy number, but let's talk about the company's own bank account. You mentioned a war chest. I was looking at the balance sheet, and one number just jumped off the page at me.
We're talking about the cash position, right?
Right.
As of December 31st, 2025, eToro is sitting on $1.3 billion in cash, cash equivalents, and short-term investments.
$1.3 billion. That seems almost excessive. I mean, for a tech company, why hoard that much cash? Is that just being conservative, or is it ammunition?
It's strategic optionality. In this interest rate environment, cash gives you two things: immunity and opportunity. Immunity means if there's a huge market crash or a crypto winter, they can weather it, no problem. But the opportunity is the interesting part. It lets them acquire competitors or, as we see in this report, bet on themselves.
Right, the share repurchase. They announced they're increasing the buyback program by another $100 million.
Exactly, and that's a signal. When a company buys back its own stock, the board is basically saying, we know our business better than the market does, and we think our stock is on sale. They're using their $1.3 billion to return value to shareholders. It shows a ton of confidence in their 2026 roadmap.
It's the ultimate put your money where your mouth is move. Okay, so they have the capital. Let's look at what they're building. This whole super app strategy. We've all seen trading apps. We've seen banking apps. What makes this a super app?
The distinction is in the ecosystem. Yoni Asio was very specific about advancing the build-out of this concept. It's moving away from just execution, pressing a button to buy Tesla, toward the entire life cycle of investing. And the centerpiece of this new strategy is AI.
And Tori, I saw this. They're calling it an AI analyst. Now, be honest, is this just a customer support chatbot that's been rebranded, or is it actually doing analysis?
It seems to be much more than a support bot. The report positions Tori as a core part of the investing proposition. The goal is to solve that analysis paralysis that most retail investors feel. Imagine having a junior analyst sitting next to you who can parse earnings reports, sentiment data, technicals, all of it instantly. That's the promise.
So instead of me trying to read 20 news articles to figure out why a stock is down, I just ask Corey.
That's the idea. But here's where it gets really interesting. It's not just about their AI. They're opening the gates. The report mentions they're using public APIs to allow users and partners to build and share their own strategies.
Wait, explain that. Public APIs.
Yeah.
So they're letting third-party developers build on top of Etoro.
Yes, they are preparing to launch an Etoro app store. Think about what the App Store did for the iPhone. It turned a phone into a platform. Etoro wants to do that for finance. You could have investor builders creating specialized trading tools or risk management algorithms that you can just download and apply to your portfolio.
That is a massive shift. It moves them from being a simple broker to being a platform. So theoretically, I could download a strategy built by some quant hedge fund and apply it to my $5,000 account.
Theoretically, yes. And they're already laying the groundwork with their institutional partners. The report lists new smart portfolios launched with some heavy hitters like Franklin Templeton, Wisdom Tree, ARK Invest, and Amundi.
Wow, those are giant names. ARK Invest, that's Kathy Wood's firm. So a retail user gets direct access to those institutional-grade strategies.
Correct. And Etoro is also launching what they call alpha portfolios. These are quantitative strategies they've developed in-house that leverage Etoro's own user data. Remember, they have 40 million registered users. That is a gold mine of sentiment data. They are crunching it to create strategies that users can then invest in.
That is incredibly meta. They're using the collective intelligence, or maybe the collective panic, of their own users to build strategies for those same users.
It's the social trading concept finally growing up into a quantitative product.
Now, part of this super app utility is availability. The report mentions a move toward always-on trading. I feel like we've been hearing about 247 markets for a while, but it's mostly been a crypto thing. Is this bleeding into stocks?
It is. The report says they're introducing 247 access to select popular assets and plan to expand this across asset classes. It's a response to how the world works now. Information flows 24/7. If news breaks in Tokyo at 3 a.m. New York time, users want to react. They don't want to wait for the opening bell.
It effectively kills the concept of pre-market and after hours. It just becomes the market.
Precisely. And they're expanding the where as well as the when. They've added access to the Abu Dhabi Securities Exchange, the Hong Kong Stock Exchange, and markets all across the Nordics. They now offer equities from 25 different stock exchanges.
That global footprint is impressive. But I did notice they also highlighted some specific wins in the U.S. And we know the U.S. is a tough nut to crack for international fintechs. The regulations are intense.
They are. But Etoro is pushing hard. They launched copy trading in the U.S. This is huge because copy trading has always been their killer app globally. The ability to automatically copy the trades of a successful investor. Bringing that to the U.S. market differentiates them from a Robinhood or a Schwab instantly.
Right, because nobody else in the U.S. really offers that social copy feature at scale.
Exactly. They also rolled out stock margin trading for eligible U.S. users and expanded their crypto offering to over 100 assets for their U.S. clients.
Over 100 crypto assets in the U.S.? That's surprising given all the regulatory crackdowns we've seen. Shows they're confident in their compliance.
It does. It signals they aren't backing down from the U.S. market. They are digging in.
Okay, so we have the trading tech, the AI, the global access. But there's another layer here that I think is crucial for their long-term survival. Stickiness. It feels like Etoro is trying very hard to stop being just a place where I gamble on earnings and start being the place where I keep my life savings.
You've nailed it. Trading is volatile. People trade a lot in bull markets and then they disappear in bear markets. That churn is a killer. The solution is wealth management. They want to serve investors at every stage of their journey. That means capturing the boring long-term money, not just the YOLO money.
And the numbers in the report back that up nicely. Look at the UK, their ISA products. For our international listeners, an ISA is an individual savings account, basically a tax-shielded wrapper. Assets under administration there grew by 7 times from Q4 2024 to Q4 2025, 7 times in 1 year.
It's explosive. It shows users trust the platform enough to park their long-term, tax-advantaged savings there. And it's not just the UK. In Australia, their superannuation offering the pension system saw asset growth of 44% over 2 years. And in France, a new partnership with Generali to offer life insurance and retirement products.
This changes the valuation multiple of the company, doesn't it? A company holding my pension is worth more than one holding my play money.
Absolutely. Pension money is sticky. It stays for decades. And to lock that ecosystem in even tighter, they have the neobanking arm, Etoro Money. Transaction volumes there increased 6.5 times year over year.
I saw that. And they have the debit card with the stock-back rewards.
Right. It connects spending to investing. If you get 1% back in crypto or stock every time you buy coffee, you are constantly re-engaging with the app. It just blurs the line between your bank account and your brokerage account. If eToro becomes the place where your paycheck lands, they've won.
The super app strategy in action. Okay, I want to pivot to that mystery we teased at the start. The January 2026 data. This is fresh. What is the crypto paradox?
This is where the diversification of their business model really shines. We have the KPI metrics for January 2026. If you look at capital markets activity, that's stocks, ETFs, commodities, the total number of trades was 74 million. That is up 55% year over year. It's a boom.
Okay, so the traditional markets are on fire.
But then look at the crypto activity. The total number of trades for January was 4 million. That is down 50% year over year.
Whoa. Equities up 55%, crypto down 50%. That is a massive decoupling. Usually when retail is excited, they buy everything. Why the split?
It could be a sector rotation or maybe just a quiet month for crypto volatility, but the invested amount per trade in crypto was also down 34%.
So if Etor were just a pure crypto exchange, like a Coinbase or a Binance, this report would look like a complete disaster.
Exactly. They'd be reporting a 50% crash in volume. But because they are a multi-asset platform, the surge in equities and commodities completely offset that crypto lull. The report explicitly mentions a recent spike in commodities trading in January. It proves the super app model works as a hedge. When one asset class sleeps, another wakes up.
That resilience is key. But despite the crypto dip, the CEO, Yoni Ashia, sounds incredibly bullish on blockchain. He had that quote about the financial system moving on-chain.
He did. He said they're positioning eToro for a financial system that is increasingly moving on-chain. He views the current dip in volume as just noise. The long-term thesis is that stocks, bonds, everything will eventually be tokenized and trade on a ledger. He's building the infrastructure for that future, regardless of whether Bitcoin had a bad January.
Speaking of building infrastructure, we have to talk partnerships. There were 2 in the report that caught my eye. One involves fast cars, and the other involves, the Winklevoss twins.
Yes, quite the mix. The first is a multi-year partnership with the BWT Alpine Formula One team.
That feels like a classic, we are a big global brand play. F1 has a massive, wealthy audience.
It does. It puts a logo on the car, cements them as a Tier 1 brand. But the second partnership is much more strategic from a business operations standpoint. The partnership with Gemini Space Station, Inc.
And just to clarify for everyone, despite the name, we aren't talking about NASA. We are talking about the Gemini Crypto Exchange, founded by Cameron and Tyler Winklevoss. So what's actually happening here?
Right. This is a migration deal. It looks like Gemini is exiting certain markets or consolidating its operations, and Etoro has agreed to be the destination for Gemini's customers in the UK, Europe, and Australia.
So this is a consolidation play. Etoro is just absorbing users from a competitor.
Exactly. It's a very aggressive way to grow. Instead of spending millions on marketing to find new users, they are taking over a user base that's looking for a new home. It reinforces their position as a consolidator in the market. As smaller players struggle, Etoro is big enough and regulated enough to step in and say, we'll take them.
It's the adult-in-the-room strategy. We have the licenses, send your users to us.
So looking at all of this, the cash, the AI, the consolidation, what's the mood in the C-suite? What is the CFO saying about the rest of 2026?
The mood is definitely optimistic. The CFO, Marin Shani, pointed directly to that strong balance sheet and a clear execution roadmap. He stated they are well-positioned to deliver accelerated growth in 2026.
Accelerated growth. That's the phrase investors want to hear. It implies that the heavy lifting of 2025, going public, building the Tory infrastructure, securing licenses, is done. Now the machine is built and they just need to pour fuel on it.
It's a compelling picture. So, to recap this deep dive, eToro has successfully transitioned from a private startup to a public heavyweight, generating real profits over $200 million. They have a $1.3 billion war chest, and they're fundamentally changing the product from just a trading tool to an AI-powered super app that handles everything from your coffee to your retirement.
That's the summary. It's the evolution from social trading to intelligent wealth management.
It's a fascinating shift. And before we sign off, I want to go back to something you mentioned earlier about that App Store for strategies.
Sure.
It feels like we're standing on the edge of a pretty major philosophical change in investing.
I think we are. If you combine the Tory AI analyst with the ability to download algorithmic strategies from an app store, we are moving toward a future where the investor, our listener, might never pick an individual stock again.
Right. I'm not buying Apple. I'm buying the tech momentum algorithm that buys Apple for me.
Exactly. The skill set of the future investor might not be analyzing balance sheets. The skill might be analyzing algorithms. Which bot do I trust? Which strategy fits my risk profile? We're automating the decision-making process itself. And that raises a provocative question. If the algorithm is picking the stocks and the AI is doing the analysis, what is the role of the human investor? Are we just the battery pack that provides the capital?
Wow. We're just the liquidity providers for the robots. That is equal parts exciting and terrifying. The death of stock picking and the birth of algorithm picking. I have a feeling we'll be talking a lot more about that in 2026.
I think so too.
Thank you all for joining us on this deep dive into the future of finance. We'll catch you on the next one.